What's up, everybody? Welcome back to the Next Win podcast with your host, Aunt Ma, co-host Justin Vaseur, and Mr. Lender, William Win. If you guys are new to this podcast, make sure to subscribe to the Next Win on YouTube, all podcast platforms, Spotify, Apple, Amazon, iHeartRadio, Google. We're also on TikTok and Instagram. So if you have not reviewed us and give us a rating on Spotify, please do help us out. Give us a rating, give us a good one, and don't be like you are on Yelp and give us some bad reviews. We just don't want it at all. All right. So today you can see the backdrop is all red because we are doing TikTok rundown.
Rundown.
And what did you say?
Rundown.
Rundown. And
These sound effects we got us.
I hope you guys have been enjoying this segment. This is very fun where we watch videos and we react to them to see if they are viral or verified. Meaning that if it's viral, are they putting out these videos because they're just trying to get views and it's false information? We want to kind of debunk those and see if we can verify them and make sure that they are real videos that are being put out on the internet. So we'll watch these and, make our claims, viral or verified. All right.
Dope.
You guys ready?
I am ready for the first one.
Always.
All right.
Give it to me.
Every single house I bought has been in a land trust for several reasons. Number one, you have absolute privacy. Nowhere on the deed does it show who the beneficial interest of the trusts are. The beneficial interest own the trust that owns the house. The house is deeded to the trust, you own the trust. So therefore, if it's not shown on any public record, there's no one can find out who the owner is. Number two, I expect you're going to die someday, and most people do. So you got to ask yourself, do you want to die and let everybody else figure out what you got after you're gone, or do you want to make it easy for your survivors? If you own a land trust, if you're the beneficial interest, and if you die, nothing happened. There's no probate. There's nothing to file downtown. So you have estate planning benefit there. And thirdly, you have lien attachment avoidance. If a lien against you of some sort, could be a judgment, could be IRS tax lien against you, a lien against you can't attach to a property you do not own. You do not own the property. The trust owns the property. You probably own the trust. So a lien can't attach to a property you don't own. Geez, that's enough reason right there if you ask me.
I don't know how true that is, guys. There's some truth and some non-truth to that.
Yes.
Every situation is different. But first off, what were you going to say?
I don't know anything about that.
Okay, I can explain it because I've been going through it recently with a client. But first off, this guy, the verbiage he's using is like 1930s. It's no longer called a land trust.
It's just a trust.
It's called a living trust.
Yes, living trust.
So, but he's using land trust as
That's
the
old
word.
school.
So, but basically, having a trust is so beneficial to everybody for the reason that one, it won't say who owns a home. It will say the trust owns a home. Same thing as if it was an LLC, right? It'll say the LLC owns a home rather than Justin Vaseur lives at 555 Las Vegas Boulevard. It will say Justin still lives. 555.
Big D.
Yeah,
Big
but
D
obviously
trust.
you're not going to pick a trust name as Justin Lives.
Yeah.
You'll pick like
Big D trust.
Big D Trust. Yep, exactly.
Mm-hmm.
So it's great. It helps with tax purposes. So like if you were to pass away, Justin, God forbid, please don't. If you were to pass away and you put me on your trust, the house would go to me and I don't have to pay taxes on it.
You have to go to probate.
Yeah, it doesn't go to probate. Probate is where they have to go through court.
Yep.
And fight for, the
Ownership.
rights.
Yep. Then I
Right.
belong to it.
Like let's say me and William are your brothers and you only gave it to me and not him. Your trust will that's it.
I said final.
He
But there's no
can't
trust, I can sue.
Yeah, if there's no trust, it's like which brother gets it. We're gonna fight till the death,
So trust is good for everything, not only house, property, but your savings accounts, investment, everything. So the trust, everything's in the trust. That's why it costs like a couple $1,000s to make.
So does that mean that everything he puts in his trust, and when he passes away and he gives it to me, I get it all?
So basically,
And tax free.
So in a trust, there's a trustee. The trustee is the person. This thing's like the administrator, right? The trustee can be the beneficiary as well, right? Or sometimes it's not. So for example, if you're a beneficiary, then you split the beneficiary. So let's say Justin gets the house, you get my $50,000 savings account. That's in the trust. It will specify that.
Right.
The trustee's job is to make sure that happens, right? But sometimes the trustee is a beneficiary too. So
Okay. So every situation is different when you
Yep.
pass away and how the living conditions are for the other person. We are going through something right now with a client where someone passed away. They got the home, but because when they got the home, so
It's complicated.
it's complicated. So
Because
like,
the trust wasn't updated. Yeah, because the trust wasn't updated, and then
So what? Okay, so what they told me was that the grandfather passed away and gave the granddaughter the home because her mom is still alive. The trust did not continue when it got to her because the mom is alive. The trust had to be canceled out and it went to her personal name.
Yeah.
And because of that, now she does owe all the taxes
Yep.
for when she gets the home.
Yeah,
And so
it's-
the problem of the trust, like that this guy is talking about in the video, it didn't solve anything.
Yeah.
Right.
It has to be updated, and on top of that,
But why does that even matter? This is a lawyer thing here now that we're talking about.
it's
Like,
a lawyer thing. But
why-
I always recommend getting trust updated.
But why does the mom have to die?
There's probably something in the trust that specifies maybe the mom's supposed to get it first. XYZ. We don't know. I didn't look through the trust. But the trust is like the final word.
But she's the beneficiary, the granddaughter.
Yeah, but she might be the beneficiary. The mom might be the beneficiary as well. You get it? So we don't know. We don't know what we don't know what it says, but it has to be something in there, that wording that the attorney recommended to do that. So
It's crazy.
That's so crazy.
right?
There's always-
So it's
Is
like
there-
the grandpa tried to protect the taxes, but it didn't even work out.
yeah,
Yeah.
So
Now, is a trust something that like once you reach a certain level of like wealth or whatever, that's when you start
Not
it,
always.
or is
No.
it like
No,
do it
always.
now.
tomorrow I can do it?
yeah.
Mhm.
Even though I
It just costs like, it depends on the attorney, from $1,000 to like $2,000 to how complicated you get, maybe more.
Like let's say you have a car and it's paid off, and you want the car to go someone when you pass away. You know, and you can
Without paying
put
it?
that.
Yeah.
It's like writing a will. Is that what a trust is, or is it different?
It is kind of like a will, but in the will you still get all these tax complications.
Oh, so you
But
put the will in a trust
because the trust has its own social security number.
I see. So like if you were to pass away, just I keep saying this, I'm sorry, but and you want to give your car to me, if you didn't put it in a trust, when I get the car, I gotta pay taxes like I bought the car for the transfer of ownership.
Yep.
But if it was in a trust, it's like it's a gift to me.
I see.
Yeah, it's
So
it's
in a will,
complicated.
it'll still be like a gift.
Yeah.
But if it's in a trust, it's tax free.
Yeah,
Yeah,
it's complicated, dude.
But
It sounds
how
cool.
about this though? So let's say he gives me his car or his house or whatever, and it's tax free, right? Now, is it tax free because the house is remaining in the name of the trust? Yes, right? So now what if I say I want to put the house under my name? Now I got to pay taxes.
That is a good question, and that's a question that we should ask an
See?
attorney.
I think now once you change the name out of the trust, now you have to pay taxes.
That's what I
So
think.
here's another situation. I have a family member. Her dad passed away and gave her the home that she's living in now for the last 30 years, and it's been under the dad's trust. Next year, she is going to remodel the home, and she needs to get insurance, and she's also going to refi. She cannot do anything because it's not under her name. So she changes it. Now she's going to have, now it'll be under her name. Now it's also going to add a different assessment value
Yes.
and everything. So it's like, do you keep the home in a trust forever? Like what do I do if I get the trust and the home and now it's my turn to die and I want to give the house to my kids? I go from trust. I don't control that trust.
Yeah, it gets complicated. So
It only
It's
works
weird
like
'cause,
one
like,
time.
Because most rich people do it that way, don't they?
yeah.
They do, but I think
I'll
what
do
people don't
everything I trust.
realize that it only works one time.
Oh, it might work more. It depends on the attorney. You can just
Okay.
because in the trust you can put that the trustee because I used to work. I don't have to say it again, but I used to work in the investment. So I deal with trust all the time. In the trust, it also can say the trustee can appoint a new trustee.
Oh, I see.
Yeah, or some trusts the trustee cannot appoint.
Okay.
But majority of them is that the trustee has the authority to assign a new trustee.
So if we do it right, the trust can last
Forever.
generations.
Yeah, it will just pass it on.
William, you have a family of 4. Do you have a trust?
Not yet, but it is in the works.
Yeah, mine too. On the next home, I would do it. I'm not I'm not dying right now.
Yeah, and I don't have $1 million to protect at the moment.
Fuck,
Proved you wrong. Damn.
Damn.
Oh yeah, so that's I think the video is
It's verified. He just has some wrong information, but it's a
Yeah.
verified video.
verified, but the lien part is weird too. There's no lien because he probably owns the house free and clear.
Yeah,
There's a lien if there's a mortgage on the house.
So there's no lien while it's in the trust, but once you switch it out to your personal name, then the lien comes back.
No, even if there's mortgage, there's a lien on the house.
Oh,
Because the mortgage has to go under the person's name.
yeah.
It gets complicated.
I don't
dude.
know. Yeah, I think the liens continue.
That's so complicated.
Yeah, that's why attorneys, you pay a lot of money to attorneys.
Oh, here's the last thing. When you guys are looking for a trust lawyer, the biggest issue that I've come across with all my clients is that when someone does die and they get their trust, when they call that lawyer and say, "What do I do now?" all the lawyers say, "I can't help you." All they want to do is set you up with the trust, and that's the only work they want to do. They don't help after death.
So it depends on the attorney.
So-
the more wealthier ones have an attorney that, like, it's a family business. Like this case
Yeah.
going on. Yeah.
So, guys, when you look for your trust lawyers, make sure that they will help you after someone dies.
Yep.
Okay. Not just to get it started. Yeah.
Ready for the next one?
Yes, sir.
Okay. My official 2024 real estate prediction. Sorry. I'll rewind it.
Yeah, rewind it.
We are about to see history repeat itself. You guys remember 2018, 2019, right before COVID, interest rates were decent.
They were
weren't
4% at that time.
COVID good. They were decent, and home prices weren't great, but they weren't crazy. And then COVID happened, and interest rates went way down, and then everybody and their brother went to
Yeah.
buy a house, and then prices went nuts. And there was multiple offers on every property, and bidding wars, and people were waiving
Yes.
inspections and bringing appraisal gap guarantees and bringing cash to the table to cover differences between what they paid for the house and what the house appraised for. And it got absolutely
think that's gonna happen
bonkers,
again?
and everybody complained about how high prices were on houses. You're about to see that shit again.
I don't know.
That's what's happening right now. Only I think it might even
used
be
to believe
worse,
that.
to be honest, this time around. Now, we had the last couple of years, 2022, 2023, where interest rates were elevated and prices calmed down a tad. They didn't go screaming high. People were able to buy homes without, giving their left arm to buy it. They didn't have to waive inspections in many cases. They weren't bringing appraisal gap guarantees. It was, a decently fair deal. And now interest rates are falling, and they're falling pretty quickly. Over the last couple of months, you're down a point and a half in some cases.
Oh, no. This is a long video, bro.
Stop it right now. I think we got the gist of it.
Yeah.
It could have been a verified video, but I think it's viral. Because I'm in the market every day and I know what's going on.
Same.
You said it's viral?
I think it's viral.
Okay.
Same.
Yeah, I would say it's viral.
So,
Because no race had to drive 1 point, dude.
well, okay. So I had that same mentality last year. That's where we all thought the market was heading. And now that we're in it, that is not happening. So I was making almost the same type of videos until things started changing, right? But we had the experience of the government and all these people saying, we are going to lower interest rates, right? And what is happening right now?
It's not lowering.
It did not happen. Why is it not
It
happening?
went a little bit, but just the data is coming back not with the way they want it. So they're not lowering as much as we thought. And inflation's, I think, is climbing a little bit. So it's a whole bunch of...
We got duped here.
Yeah.
So when I thought the Fed says they're going to lower rates, I thought they were going to lower rates no matter what.
Oh, no.
But we all didn't know they're going to say, we'll check again later and see if we can do that or not. Because when they checked again, they're like, oh, shit, we can't do it. You know? And now we're all like, well, fuck, you told us you were. It's pretty much like listening to my dad. Right?
Oh, yeah,
He
yeah.
tells us one thing, and then when the time comes, it doesn't happen. It's like,
Right.
we'll see. It's like, what the fuck? So that's what's happening right now in the real estate market. And the prices that inflated a couple years ago are still hovering.
They just stayed.
They did not go down.
No.
We are, like you said, it's the same. So rates didn't go down too much. Prices did not drop. We're still kind of in the same situation here.
Yep.
It's like just on pause while we're still living our life.
Yeah. I mean, they were kind of talking about a soft landing, but
What's a soft landing?
I don't even know what that means, really.
Who said that?
A lot of people in the market, like the housing market and all that stuff, and economy and stuff like that, like trying to balance the inflation and prices
Right.
and without
Disrupting something else.
without causing a crash or without making things elevated either.
Just taking it slow and easy.
Yeah.
I see. So
I mean,
that's
it's slow.
I do see that happening. So they kind of stopped a chaotic real estate summer from happening,
Yeah.
and prices go like skyrocket.
Race have been jumping like crazy. So it's been hovering.
My dad, I mean the Feds, said that instead of dropping the rates in spring and summer, they said now they're gonna drop it 3 times in fall.
Well, you will
So
see
after the summer.
Yeah.
Right. So like, if that were to happen, then they kind of saved the summer frenzy. So
We will
I don't
see.
know.
We'll see happening with the elections too.
Yeah.
It has to do with a lot with that. So
What does that mean? Like it goes.
the new president comes in, or the same president.
What usually happens when there's a new president?
The stock market goes crazy because
Goes
we don't
down
know.
or up?
Up depends up or down depending how the majority of people feel about the president or the incoming president and his policies.
see.
They want to be prepared for changes.
So if
So like when Biden came in, like market dropped like 500-600 points.
because he thought he was going to destroy the world.
Mhm. But then
Which he kinda did,
calm
no?
down.
Yeah, a little bit.
Yeah, but no, he calmed down. He actually stopped when the previous president, the market was crashing a lot.
Like so, when Trump.
Yeah, when Trump was about it. So it's just the feelings that people like emotions that our people are reacting to. So we'll see what happens.
All right. So you guys heard it here. If you want to get a win on some investments, we'll wait for November for this election period to see if things crash. If they crash, y'all better buy in.
And it's a short period. It's not this is not gonna stay down there. It's just crashing while
Right.
people adjust and kind of understand what kind of policies are going to
you
happen
go.
going forward.
Stack up till November, guys. But hey, if it goes the other way and things go up, then you just stack to buy a home.
This is setting new homeowners up for failure.
Hmm.
How to avoid this at the end.
All right, another new build that's going to be subject to payment shock. I'm going to tell you what to look out for. This one just got closed 2 weeks ago. I asked the owner if I could share it, blocked out the information. So here we go. Great interest rate on a new build, 30-year fixed FHA loan. $1,437 is the principal and interest. That part does not change. You're going to come down into the escrow. Projected payments, principal and interest, that matches. Mortgage insurance, separate, but that checks out, makes sense. Escrow account, $168. That's supposed to pay my taxes and insurance.
That's some cheap property taxes.
Go down to the next box. So that they tell you estimated payment is $1,732.70, total of all these. Go down to this next box. Estimated taxes, insurance, and assessments is $526. Where is that in your payment? Where is that in your estimated payment? If you scooch over here, you'll see it says, oh, only some of the property taxes are included in this estimate above. There is still no good explanation for why that number can't be right there, and it should be, because nobody's reaching out to you in November saying, hey, now you have a home on the land, your tax is going to change. No, you keep paying this all the way through 2025. And then at the end of the year, when the tax bill comes out, they say, oh, now you're short. So you're going to sit paying that payment for about 18 months until you figure out you're about $350 to $400 a month short in your escrow account. And the worst part is they knew it. They knew it. They put it right there. And this is an estimate. Nobody knows what the tax is going to be because it hasn't been assessed yet. But they know it's not going to be what it is now, which is this. Because it's not a piece of land anymore. It has a house on it. It has a mortgage attached to that very house that's there. Of course it's there. If these two numbers match, this one and this one, which makes this payment More like what, 2,100? Hopefully it's right, but again, remember, it's still estimated. It's still an estimate. Typically, if this number matches this, it can go up a little bit. If this number is way lower than this, you're going to get that payment shock in about a year and a half. So what can you do if this is the case and this is the payment that you've got? Great question. What you want to do is save that difference to the side, put it in a high yield savings account, something, so that when that payment shock comes through, you can just pay it off. You don't have to pay it monthly, and then your payment should go up to just $2,100 the way it was. You've already been putting that money to the side. Nothing hurts you too badly when it comes to understanding and being prepared. Rather than if you got the payment shock and you didn't have the money aside, your payment would probably go up to about $2,500, $2,600. For all of 2025 to pay off the payment shock, then it would go back down to the $2,100 range. And then by that time, it might be $2,150 because of taxes and insurance and stuff. So hopefully that helps. There's a lot of questions from the last video. I'll add this to the playlist so you can link.
Isn't this guy a lender?
Oh, I don't know.
Did he say he was a lender in the beginning?
He's a realtor.
Oh, he's a realtor.
He's a new build.
Oh, I see. I thought he was a lender. I'm like, you're calling yourself
I
out.
all these long
It's
videos,
verified.
dude.
I know, that's a long video.
I verify it.
You verify it? I don't even know what that was all about.
It's a new
I've been
build.
seeing a lot of videos like that.
It's
Like
because
where
new builds. So what happens, when we buy a property now that's not a new build, we kind of, even I told you, we kind of know the estimated taxes, but we don't know until the county updates. I mean, that's when our clients get a supplemental tax bill.
Is that
a year later?
So that's different from special assessment taxes.
Yes, because a new build, right? To the counties, there's no house on it yet. That's what he's saying. So the taxes are $100-something, right? Once the house is built on it, then it has to be reassessed to with the new value of the land with the house, and then your tax bill is going to change, right? We put estimate because we cannot make you pay something that is not on record.
So, but why is his only $100 a month
That's
starting?
because this it's not showing the house on there yet.
But yeah, so it's only like $1,200 a year. So I have a new build.
Yeah.
And I got charged the full amount of property taxes, so I'm paying $1,000 a month property tax. It's like $11,000 a year. And then I still get supplemental, but it'll be like $400 more for the year,
Yeah, so
not a month.
Yeah, so it also says it depends on the builder and the land, the builder in the area. Some builders, like some counties, work very we do houses in Florida. I have an agent out there. The same, it shows it does
Really?
exactly that. And then once the house is built, then the county updates the records, and then you'll see the new.
But
taxes.
you already know the estimate, the tax rate,
but we
and
can't-
the value of the home.
That's why he's saying it. That's why you put the estimate. You yourself have to save it. The lender, we cannot charge you a phantom fee that we don't have proof to show. We don't have proof because it's not on the county record. So I can't tell you, hey, you pay me $400 more, and you go to the county, and go, wait a minute, my taxes only show $100. Now you can sue us.
Yeah, but you'll tell me on a phone call like, hey, it should be about this much.
But it's on the LE he just showed, and on loan estimate.
Oh,
it shows
the
the
extra
estimate.
amount.
Yeah.
Oh, I see.
So they're telling people, he's telling people the extra amount, put that away in your savings account. So next year you can see it. Yeah.
That's stupid.
So then, is that something like an advice that you can give to
for new builds? And then when we look at the loan estimate, okay, and the lender will see it. We go, hey, this is not the full amount, because we cannot charge you the real amount until the county updates the records.
For Vegas and LA, that doesn't happen. They know better. We know what the values are and all that stuff, and the property taxes.
Yeah, but there are some that I've experienced that in Florida.
Florida people. That's why.
That's crazy, dog.
Yeah, so it makes sense, though, right? Because they're paying tax for the land right now.
Yeah.
But the county doesn't show a house built there, so the value is only worth what the land is. And then once the house is built, and then the county updates the records, okay, never mind. Now it's worth $500,000. The land's 5 times because of the house. Your taxes are different.
Yeah, I've been seeing a lot of videos where people are basically crying because their monthly payment or whatever went up. And they're like, what the heck? I didn't know this was going to happen, blah, blah, blah. Why didn't they tell me this?
Well, the lender did a good job because it's on the paper. They probably just ignored it. It's easy to miss.
You signed it too.
Yeah, you signed it. So it's easy to miss. It's confusing.
Yeah.
Sometimes it's confusing for me when doing loan estimates. I look at them every day.
Yeah.
Where is this fee from? And it's all usually from the county, dude.
Yeah.
You pay a mortgage to the bank, then you don't own that home. You rent that home.
This is why I don't get all giddy goo-hoo about people who brag about owning a home.
He's a
I
renter.
just bought a house. No, you didn't.
You a renter.
You took out a loan to get a piece of property. You now have to pay back that loan with interest and be responsible for everything that breaks, goes wrong, and just goes left with that piece of property. And if you miss a payment or two, guess what? It's taken from you. You have no real protections. And that does not include the taxes and other fees you have to pay in perpetuity and forever on that property. So before you get all jealous when you see your friends buying a house, remember, they're not really buying the house. They're getting a loan to get a piece of property that's going to chain them into debt for decades.
I mean, that's kind of true.
I don't know. I'm
It's
going
the way
viral.
you look at it.
I think it's like both.
Yeah, I think it's both. It's the way you look at it.
Yeah, but his intention of where he was steering people is viral to me. His information is true, but that's not the reason why people. He doesn't explain why people buy a home and the benefits of that. So I'm going viral.
It's one-sided, but it's kind of.
one-sided.
I tell both. I think it's both viral and verified because he's not lying about anything.
He's not lying about it.
Yeah.
But he's just putting only the bad things. He's saying like, remember your friends are buying homes and they're stuck paying all these payments and then they can get their house taken away as well.
It's true.
Well, as a renter, you're also making all these payments. And at the same time, your landlord will tell you, hey, move your shit because I'm selling the home. And then you lost that as well. You know, there's the only benefit that he missed out on was like, hey, your friends are buying the home and hey, in a couple of years they decided to sell. They actually made a couple $100,000.
Right.
Mm-hmm.
Like,
this is how you look
know
at
what I mean?
it.
So that's why like I say it's viral because he's just hating in there. He doesn't say like, damn, dude, my friends have an opportunity to make thousands of dollars in a couple of years from buying the home.
Mm-hmm.
I think I see both standpoints. I think his thing is geared for people that aren't planning to sell, are planning to just live there. You know, not trying to make a profit. So
what I know
makes sense both sides.
What I know is that as renters, you're guaranteed losing the money.
Mm-hmm.
When you buy a home, you're giving yourself a chance to get the money back plus more.
A chance, but it depends.
A chance. That's all I'm saying. You get a chance.
Yeah.
But if you're renting, you get no chance.
Yeah, but
it's
then
just gone.
But also, some people look at it
It
because
depends.
it depends because then you have to fix the home or like it kind
How
of
do you get your money back as a renter?
You use the money that you're saving to put towards
for all the
investments.
maintenance. Yeah.
Oh, but I'm just talking about within a house.
What do you mean?
Like we're just talking about renting a home and buying a home, right?
Like if your mortgage is $3,500, but then you can rent for $2,200 or something like that.
And then you have to
Right.
you
That
have to worry
extra-
about maintenance. You have to worry about property taxes and all that. That's what I'm saying.
But that's like me saying that even though my mortgage is $3,500 a month, in a year I can refi and take out money and invest that stuff.
Yeah. That's right. Everyone's
So like you can still do whatever you want with money that's on the side of everything.
If you can refinance.
Yeah.
And then even with like, let's say like the first, 10 years, like all your money goes towards interest. Then when you refi, all your money's going towards interest again.
It is. Well,
so it's like you're like losing all that money still. With the hope that you gain some type of equity or whatever. So that like, let's say you're paying $3,500 a month and like over the year you're paying what is that, like $40,000?
Yeah.
Or $50,000, but then most of that went towards interest. I guess you're just breaking even if you sell your house for $50,000 the next year.
Right. So I agree with you where you say that.
Those are the things that I've always looked at. So like, let's say if you do buy a house, like let's say my parents, for example, right? They've lived in their house for almost 30 years or whatever. So like over those 30 years, even though they paid or bought the house for $120,000, with the interest that they had, they probably paid like $400,000.
Yeah.
And then their house is currently worth $400,000.
Yeah.
So is it even though it sounds like equity, it's not really equity.
Yeah. So
they're just,
it's the way you look at it, right? So it's like, okay, you don't think about it, and now you sell your house. I got $400,000, but you forget about all the stuff you spent.
Yeah.
That's
the interest is the biggest thing because like you'll pay like $300,000 in interest or something.
Yeah.
And then on top of that, the maintenance, the taxes. And then even when you've paid off the house, you're still paying the taxes.
Yeah.
I think the scenario that you're painting where people lose money on buying a home is kind of rare. right? One, most people when they buy a home, they don't buy in a bad area. People strategically buy in an area that's always climbing, right? It's always developing, equity is always rising, stuff like that. So there's very little people buying in areas that they don't understand, and there's no movement in their finances for it, right? There's no equity moving. So in terms of like your parents, they bought in an area that's so to where the equity is not climbing like crazy, which is why they're in the position of just having that 400K back after X amount of years.
But I think
that's most people.
Yeah, I think that's the majority of people.
In certain areas,
Yeah.
right? Maybe for certain areas of Vegas. Now, when you're talking about places like LA, everywhere in LA, that is the opposite of what you're saying. Everyone has made way more than what they paid in interest, even in Compton. Okay? Even in Compton, where the home used to cost $70,000, are now over 500 to 600K. They paid
Sure.
way more. They're getting way more back than what they paid in interest. Every home I've bought, I have gotten way more than the interest that I paid.
Yeah, it depends on the situation.
So
the
most
area.
people buy where they're buying in a good school district, buying an area that's just better, But there's the old heads who are stuck and bought a place in an area that never really grew. I have a lot of uncles and aunts who are in a bad area and it just really never grew and they're stuck there, And yeah, now they are pretty much have broke even. Well, I don't know. After 30 years or so, eventually when there's no more space, it will climb like crazy. Whether your parents see it or you see it when the house goes to you. Eventually, someone will see it. It's just that it was very, very slow in that area.
Yeah, I mean, I think the thing that I see is, I see it as the majority of people will be in that situation because the majority of people are going to be buying houses that they can have to afford it. They have to be able to afford it, or they're really crunching on the numbers, like having a hard time affording it. So they have to buy these $300,000 homes that are in like the more affordable areas or whatever. Like not everybody's going to be buying in Summerlin.
Of course.
You know what I mean? That's only like a small portion of the Las Vegas. Yeah. Everywhere else is kind of like,
I mean, the Southwest climbing, Blue Diamonds climbing.
But even in the term, like, I see it very beneficial short term if you're talking about the monetary gains. Long term, it does seem to like play out where you end up spending a shitload of money on the interest. Even if you refinance, because you're restarting that mortgage, and then those next 10 years are going towards interest again.
I agree with you on that, but I don't know if the person buying the home has that mentality in the reason of why they're buying the home. I can almost guarantee that anybody who's buying a home is saying, I want to buy a home because one, I want to own it, and two, I want to give it to someone when I die.
Of course.
So when your dad bought the home, he doesn't care how much he's paying. He just knows that when he dies, he's giving it to you. So,
I know, but
so when you get the home, you no longer have to pay all that other stuff. So it's for the next generation.
Of course.
Right?
Like I can definitely see that. The conversation that I always have with people is that, oh, I have equity in my home now. And I'm like, but do you? Because you just spent like hella money on your interest. You know what I mean? Especially if you didn't refinance, or like if you took out like a HELOC or whatever, and all those things. Like I know someone that bought their house for 80K, or what was it, 100 something K, or maybe 100K, and they've lived in it for over 30 years and they still owe 80K. You know what I mean? It's like, how the heck did that happen?
That's why there's strategy to everything. These people who are in those situations should be making extra payments. So they should pay, every month you can write one check for your interest and principal. You can add another check for principal only. So you don't have to pay 30 years on your loan. You can end up paying 18 or 17 years if you want, and cut out hundreds of thousands of interest.
In the perfect scenario right now, that's like almost impossible.
Yeah, that's
what
I get. Some people can't afford that.
Yeah, I get that.
Yeah,
some people can't afford that. But if you have a home, you should be able to afford another $500 a month if you want to.
I don't know. Some
what
of
I
these
mean?
loans are done. They're like 55% DTI.
Right. We
I'm
have
like,
to
you can't
People
do it.
should not buy homes like
They
that.
still do.
But we
You know?
have to talk about the majority though.
Yeah.
Like the way you're thinking is not the way the majority thinks. They want to get into a home
Yeah.
and they're stressed out. They're like house poor basically.
I do.
because
So,
they're-
I agree on that. That's one.
I agree with both of you on that.
Because our buyer,
Now-
our last buyer, we had to convince, our last seller buyer, we had to convince about it. So
Right.
it's a mindset.
And here's the difference, though. I agree with you guys both on that situation, right? The majority is stressing on home payments. And I'm telling you, my mentality is different because as the agent, I tell my clients, do not do that. We're not buying $1 million home. I want you to buy a $700K condo, a $400K condo. Do not put yourself in that situation. So the people that I deal with, I'm steering them away from that majority. So I don't deal with that.
Mhm.
So I get where you guys are coming from, where like, hey, this is the majority of people that can't afford that shit, but in my life, when I deal with these people, I am not putting them in those situations. I'm putting them in the situation of how it should be done.
Yeah.
Yeah.
So I don't know, it's crazy. Like that people don't have the right advice from agents and just other people to tell them these things.
That's the majority, sadly.
It's fucking crazy that I'm mind blown right now that you guys are telling me this.
Because I know
what I mean?
Because I worked in banking
Yeah.
15 years. Trust me, I've seen
Right.
everyone's mortgages.
I talked to all my friends and they're like,
Majority
they're
of my
getting
clients,
roommates or
yeah.
whatever.
Yeah.
They're struggling. They're thinking about like, I have to get an extra 2 jobs or whatever.
Yeah.
That's stupid.
But it almost feels like the concept of it is amazing, like to own a home and
to
stuff.
implement is different.
But the reality of it in the current world, or even in general for the last like maybe 10 years, has been kind of like damn, it's almost like a fake thing. Like, oh yeah, buy this house, you're gonna get equity, this and that, blah blah blah, this and that. But then you're slaving away for something that you're gonna end up paying more interest than the house is, worth or what you bought it for.
I think
you buy a house for $200K, you spent $300K on interest, you know what I mean? And like for a chance that the house will go up in value.
But that's why it's all perspective and how that specific person wants to look at it. So.
I think these type of people that you're talking about, just in this majority, they are definitely overpaying for their home.
Yeah.
They shouldn't. They're buying a home that they cannot afford. They're being.
Unfortunately, that's the majority of Americans. Credit card debt,
And that's
cars,
wild to me. You know what I mean?
Because people drive nice cars, but they can't afford it.
Because you see me with the people that I work with, and I tell them, we ain't buying that.
But people
right?
but some of them still do.
Some of them still do, and if they really think that they can do it, that's fine,
That's
right?
mentality, yeah. That's why that's what happened this is the biggest factor in the 2008 crash. It's because people were betting that my situation is going to get better in 5 years. So in 5 years, when the interest rate jumps up, I'll be in a position where I can pay for it. It didn't happen.
Well, most people right now, the work situation is different. They're all remote. They can find multiple jobs.
Yeah, it's harder now.
It's hard
because the higher paid jobs, for example, our last client, shall not be named, a high paying job, high position, and fired within the month, like notice.
Right.
Because the higher paying job, the more risk you're there to get laid off.
Right. That makes sense.
Even in my situation, because I've been applying for remote jobs too.
Yeah.
Just to kind of like solidify like one more source of income. And in like just being honest, I feel like I applied for maybe over 200 jobs.
Yeah.
Nothing.
Right.
You know what I mean? And that's another kind of like TikTok trend right now where like people are applying for these jobs, but nobody's hiring. There's like a theory that all these businesses are creating like phantom jobs, like job listings, so that they can report that they created these jobs, but they're not actually hiring for them. And it's causing like this weird job market thing, like the economy is doing better, but it's really not. You know what I mean?
That's
tough.
crazy.
It's tough out
Yeah,
there.
it's a weird time right now where I don't know.
Everyone has side hustles. Some of our fans have seen me on my side hustles. Just saying.
In the end, man, it's just everyone's got this different situation, and
Yeah.
you can't afford a home without stressing. like just don't buy a home, man. You know what I mean? Like,
But it's hard to say. You
the
know,
last-
keep up with the Jones is.
I mean,
Well, even when a condo is $250,000, you know, you're just like, what?
yeah, but you got to make a lot of money. You know, like the last 2 homes I bought, I had to make well over 6 figures to afford a $300,000 home for me to be stress free. You know how good I felt knowing that my payment was $1,300 a month after property taxes. I was like, damn, I can not have to work for a while if I stack up on doing things. You know, like I am so comfortable with $1,300 a month. I'm okay with buying this home.
Yeah,
you know what I mean.
But that's not like that no more. House payments are freaking expensive.
Yeah. I mean, that same home is now worth $600K, but it's like
but even that $300K home, the mortgage is
$3,000 payment,
almost like $2,500 or something like that.
So it's just
with the interest rates.
almost 3,000. Yeah, because we have one right now. So 300.
Yeah,
3,000.
I think my only advice to people is, you know, if you are trying to buy a home,
just weigh out the
the
pro and cons on your own situation.
Don't overbuy. That's the number one thing. Don't overbuy, and make sure you know the area well. You know, because don't get stuck in an area that's not going to appreciate.
Yeah.
I bought in 2 bad areas where both areas had people being murdered on the same block, gang wars, all that stuff. And my shit still appreciated hundreds of thousands of dollars. You know what I mean? So you have to know the area well to buy a home. Don't buy a house blind.
Yeah, and don't get rushed into it.
Fuck you.
Yeah, don't get rushed into it. Don't feel like you're falling behind. You see your friends buy a house because you never know. I promise you now, the majority of young people buying houses have a lot of help. Yeah. They don't tell you that, but they got a lot of help.
That's the one thing I recognized.
Yeah.
Yeah.
They don't tell you that.
Yeah.
I bought a house, but I didn't. You know, my parents gave me $400,000 for a down payment. You know?
Yeah.
Yeah. You don't know that, so don't ever feel pressured. Buy a house when you are ready. Weigh out the pros and cons of your situation. There are a lot of pros to owning a home. I do agree, and there's pros on renting. It's just how you want to do it.
Rephrase your word of buying a house. It's not even about buying a house, man. Buy a condo. Buy a townhome.
Buy a property.
Something that is affordable and still fits. You don't have to buy a house and overpay.
Yes.
You can buy a condo.
Yes.
You can buy a townhome.
Yeah, okay? I still agree we should buy a property. I agree with that. But at the same tone, weigh out your options.
Just know your numbers.
Yeah, know your numbers, and don't feel bad. You have to rent, dude. There's nothing wrong with that. So renting has a lot of advantages, and buying has a lot of advantages. You just gotta see what direction you want to go.
I'm incredibly mind blown from your statement of saying the majority of people in America, unfortunately, are overpaying for their homes because they can't afford it.
The best example I can give,
dude,
is when I was working in Irvine at banking. There was I don't know if you guys told us this story, but there was a rookie, I think, running back for Chargers, a rookie. He came to me. I helped him out. He was getting paid $50,000 a month. Guess what the balance was at the end of the month? Every month,
negative.
It was zero because he spent everything.
Yeah.
Then he didn't save it. I think I looked at a transaction. One of the transactions was $25,000 in jewelry.
Yeah.
Like, see, it's just people's mentality.
You know what I think we need to help people is, like, I wish I can help all these people who don't understand financial responsibility.
Yeah.
I wish that financial advisors was not for a rich person thing. I wish there was a brick and mortar financial advisor that charges $50 to give you advice. Not like, hey, you owe me X% or you owe me thousands of dollars to give you advice on what to do with your money.
Mm-hmm. Like, it costs a lot of money for insurance.
People need to be educated, and why can't we have just a small store where people go to a bank and they have financial advisors for you? That's affordable.
But also life just happens too.
Yeah,
happens, like for example, for me before 2021 or 2020, like I was chilling, bro.
Yeah,
and then I found myself in like a certain debt and all that stuff, and taxes and blah blah blah. And it's like, okay, well, this is my little hump. I got to get over it.
Yeah.
And some people have bigger humps, you know. They have health issues that they got to pay for. They have all these things. They have families. They never set themselves up prior to having a family. So now they got to like...
They think we're invincible. You never think about that.
Yeah, like my... one of my family members, like... I mean, you have a family. You have a family. Like sometimes groceries itself comes out to like
Yeah.
over $1,000 or something, you know.
A Target trip goes like $170. Like,
Yeah.
like
every
7
Costco
items.
trip's like 300.
Like 7 items. Like, what?
And then on top of that, you know, these house payments are almost $3,000. People barely making like 50K.
Yeah,
you know.
I think that's why that's why we're doing this podcast, is that we want to we're telling people, because we've gone through that. Like myself, like I did not build a foundation before I had kids, right?
Yeah.
And that's my hump, right?
Yeah.
I mean, before I had kids, 850 credit score, I had credit limits up to like $300,000 I can pull from, right? And then, you know, having kids, I wasn't prepared, and, you know, different situation now. So
You guys just have to be
learn from the people that had walked before you.
You have to be well overqualified before you buy a home, guys. People don't say that enough. And I'm going to tell you again, when I bought my 300K home, not only did I make over 100K a month, but my partner also did the same. That's 200K. I mean, not a month. I'm sorry, a year. That's
OnlyFans right there. Yeah.
that's 200K a year for a 300K home.
Yeah.
Okay. That is why I was able to do that. And I thought the majority was smart like that. So guys, shit, dude, that's crazy.
Yeah, the majority of people are barely breaking 50K.
It's very hard to hit six figures. Very hard.
Who the fuck is letting people buy a home with the 50K salary and buying a 500K home? Like, come on, guys, don't do that.
Yeah.
You know what I mean?
People want to keep up with the Joneses. People want to. I have a house.
If you guys are lenders and agents listening to this, please don't let people do that just so you can make a living. That's
another thing too is social media.
Yeah.
You know, you see, you know, people saying, hey, you know, if you're going to buy a house now because it's going to get crazier.
I mean, I'm saying that too, but you got to make sure you can afford it. You know what I mean? I think that's where now I need to change my narrative and tell people, look, I do say it. I always say it's the best time to buy a home if you can afford it.
Yep.
That's what I say. If you can afford it. I think you're talking about people who say like, they just want to say it to, you know,
use
viral.
Buy house,
viral stuff.
So it's, man.
Like buy Bitcoin before it goes up. Before it goes down.
You guys have to remember, if you can afford it. That's the key.
Yeah,
and that everyone leaves out.
Look at your situation.
Everyone's situation is different. So
that's important.
Yeah, I would say if you can focus on your situation for sure first.
Yes.
You know what I mean?
Yeah.
Like become a boss, like with your own life.
I know it's hard. It's easier said than done. All three of us can speak to that. It's easier said than done.
There's so many episodes where Justin says, how do I interview an agent? You know? And I think this is what you need to ask them. You need to ask the agent, what do you think I can afford? What do you think I should buy? You know, what is smart for me? Ask the agent to kind of be like a financial advisor for you.
Mm-hmm.
But you got to trust the agent to, you know, you got to find a good one to do that.
Mm-hmm.
I tell people all the time, buy less than what you think.
Yeah. Yeah.
So,
yeah, man. There you
go.
That was a good topic.
We went really deep.
Did we vote on that?
The last one.
We voted on that already, right? Okay.
Yeah.
I hope you guys enjoyed this episode of the Next Win podcast, guys. We're always here to try and get you, you know, in a better situation. We want to take you to the next level, and that's what we're here, right? How to get the next win. So if you guys have any questions, if you can rate us on Spotify, please give us some good star ratings. We're on Spotify, YouTube, Apple, Amazon, Google, iHeartRadio, TikTok, and Instagram, guys. So please support us so we can give back to you as well. All right. Thank you, Justin, Mr. Co-host, for being here today and enlightening me on what the majority does. My mind hurts from that. It hurts. And thank you, the lender William, for blessing us on being here.
Thank you for having me.
It's very hard to have a lender here every time. So you have a lender, a realtor, and a consumer. You know, this is perfect podcast for this. So thank you guys, and we'll see you next time on the Next Win podcast.